Hello everyone, Lance Ippolito here. Let's get into some of the news and go over some charts in the financial markets. So I haven't been that active in the markets because there's really been not much to do. So let's go over why I feel like deploying anything but a neutral strategy here is a little risky. So I'm looking here at TLT, the bond market. Everyone's talked about the bond market here. We broke support here, and now we're moving lower. Now, a couple interesting plays here. Everyone's short bonds now, so I would not be surprised if bonds squeeze and rally higher. But if you are an options buyer, which normally I love to buy options for the risk versus reward, you're also buying volatility, and that's what's here down below. As prices move lower, stocks, ETFs, TLT's ETF, 20-year Treasury bond ETF, volatility goes higher, so therefore option prices are elevated. So if I'm buying, for example, the March 120 calls in TLT, I'm going to have to pay up. For example, they're about 127 now, with the stock at 118.46, or I should say the ETF. So buying call options, and I went about this in the member video, and your momentum stocks like Facebook, Apple, Netflix, SPY, stuff like that, it's very difficult to do. You need a quick move in that direction because as prices go up, volatility goes down. And we go look at it really quick here on the SPY. Here we are selling off, volatility sky high, and as here we are with low volatility, nearly the whole year. You're going to start 2017. Volatility goes down as prices go up, and as prices go down, volatility goes down. So when you're buying options, remember you're buying volatility, which makes it valuable if you like to sell options. I'll never say sell a naked option, but selling a bull put credit spread, an iron condor, bear call spread, stuff like that seems to be in play. A couple of names that are actually holding up pretty well, and I really hate saying, hey, buy this with your eyes closed. Buy this, buy that, oh, just wait time then if the stock goes down. I don't do stuff like that. I don't have the patience. I like looking for names that held the relatively second double bottom. Something like a Microsoft held it very, very well. And it's actually been holding up, not doing anything crazy. That's what I prefer, these stocks that are more conservative. Even letter X, out of all the weak charts here, yesterday it took out the prior short-term high here on some really nice volume, and there's been some call buying, even short-dated February next week in March in letter X, which I like seeing. And then the goal of kind of my trading is to find these standout stars that don't care about the overall market, something like a Match.com. I mean, this name reported earnings, the stock went up, nothing huge. It was implying a pretty good move. Next day, gave back the gains, right back to demand, and here it is ricocheting on high volume higher. It doesn't care what the S&P is doing. That's what I like to see. My other favorite stock in the world, Weight Watchers. What market correction? You don't see one here in Weight Watchers. You have a huge run up, consolidation phase, then a breakout phase on high volume, and here it is trading higher again. Stuff like this you have to love because the market can be down, let's say, 50 points tomorrow, and a stock like Weight Watchers or Match may even be up. I mean, absolutely incredible. This is what I want to look for in trading, not so much of, hey, the S&P is going to go here, hey, the Dow's going to go here, when there's all this news and uncertainty. It's just I'm not smart enough to keep up with all that. I don't think anyone is. And from a risk versus reward point of view, I know I'm not going to be able to risk a little to make a lot in something like the SPY, but rather like a Match.com or Weight Watchers or something, I know that these stocks have the potential to move with a highly short float, setting up a short squeeze. Even names like a Snapchat or Twitter, stuff like that, these are names that I prefer. Thanks, everyone.